American Red Cross is helping with shelter. A federal department is about to begin a path to elimination, as CBS's Erica Brown tells us.
President Trump is expected to sign an executive order Thursday aimed at dismantling the Department of Education, one of his key campaign promises. Fully eliminating the Department of Education would require congressional approval.
The U.S. comes in 24th on the Worldwide Happiness Report just out. Co-editor Jan-Emmanuel Deneuve says social isolation is an issue, especially with younger people.
Youth in America are now twice as likely to be sharing no meals whatsoever with anyone in the past day than was the case 20 years ago.
He said if only people under 30 were polled, the U.S. would rank much lower. CBS News Brief. I'm Michael Toscano.
Missed the top headlines on Bloomberg 1130? Get the latest news when you want it. Updated continuously throughout the day with Bloomberg News Now. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app and anywhere you get your podcasts.
Life is full of moments, from first steps to first loves, moments that make life special. Our life can also bring us difficult and disruptive moments like a cancer diagnosis, which is why the groundbreaking work of Stand Up to Cancer is so vital. They know the problem of cancer won't be solved by one doctor, one lab, or one hospital. It takes collaboration. That's why Stand Up to Cancer brings together top minds from different fields to find new and better treatments so patients can thrive. So when it matters, we can all show up for moments of a lifetime. Please join Stand Up to Cancer and Myrtle Beach to help families get back to where they belong, making new memories for years to come. Please go to standuptocancer.org to see how you can join the mission.
Join Bloomberg in Atlanta on March 27th for Innovation in Play, Rethinking Possibilities in College Athletics. Speakers at this event will discuss what it takes to succeed in collegiate sports today and what innovations are reshaping the game. This event will also feature a live recording of Bloomberg's The Deal podcast with Jason Kelly and Alex Rodriguez. This event is presented by Invesco QQQ, Invesco Distributors, Inc. Register at BloombergLive.com/sports.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Intelligence Podcast, a conversation with Bloomberg News senior reporter Claire Rukin on how private equity firms are getting rid of their equity.
If you look at where deal flow's coming from, you've got a lot of refinancing of existing debt, and then you've also got these dividends now happening. It's like the next stage on because the debt markets are so hot. So there's been a record level of inflows into credit funds and collateralized loan obligations, which are the biggest buyers of loans, and they're desperate to put their money to work. And because there's been a lack of M&A and a lack of new places to put this money, sponsors have been able to get creative. That's private equity firms, and they are doing dividend recaps. So they're adding debt onto companies and taking it out in the form of dividends. And this is something that investors traditionally don't like because obviously you're piling leverage onto a company, and it's something that's usually a no-go. But because the debt markets are so hot at the moment, they're like, yeah, this is great. It's a new place to, put new capital. And so they're giving the go-ahead to them, basically.
So usually when we talk to private equity guys, they're like, look, you're locking in your money 5, 7, 10 years. It's going to be fine. We can manage any sort of big swings and volatility. Does that still ring true, or are we seeing some issues here? When liquidity tightens up, it gets harder and harder to find ways around it.
They are having some difficulties. They're having difficulties showing those exits. So whether it's via the IPO market or the M&A market, they just haven't come back yet to the level that they would have wanted.
Hear the full conversation on the latest edition of the Bloomberg Intelligence Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
7:40 in London. Good morning, I'm Stephen Carroll. Let's bring you up to speed on what's moving on markets. So as we count down to the start of the European cash trade, we're looking at Euro Stoxx 50 futures down 0.2%. Similar drop priced in for the CAC 40 and the DAX at the open. The FTSE 100 down just 0.1% in futures this morning. On currency markets, we are seeing a further weakening in the pound and the euro against the dollar. So both are down 0.3%. The pound at 129.66. We had that new labour market data out at the top of the hour showing wage growth excluding bonuses at 5.9% year on year, so remaining strong, and that in focus ahead of today's Bank of England decision as well. We're not expecting the bank to move interest rates, although we'll be watching to see any commentary around how they're pricing or dealing with the uncertainty on the trade front. We did have commentary out of Jerome Powell from the Federal Reserve yesterday, talking really about downplaying the risk of the impacts, applying the word transitory, controversial as it might be in central banking circles, to what he's expecting the inflation impact of those trade tariffs to be. We did see the S&P 500 rally by 1.1% yesterday, and futures on the S&P 500 are pointing higher this morning, up by another 0.4%. Less positive picture for equities in Asia though. The Hang Seng down 2.3%. Tech shares there among the sell-off, down by 3.5%. Markets taking note of an interview in the FT with Jensen Huang from Nvidia, looking at the potential for more investment in the US for its facilities. That's something to be a boost for that industry, but perhaps less good news for Asia. Elsewhere on markets, keeping an eye on gold prices, a touch weaker this morning after hitting another record high, $3,045 a troy ounce. And just a word on Turkey as well. After the big drop that we saw in Turkey's benchmark stock index yesterday, the BIST 100 is up by 1.7% today. It was down around 8% in trading yesterday. The Turkish lira flat on the day after it dropped to a record low against the dollar following the arrest of a top opposition politician. That is your Bloomberg Radio Business Flash.
Stephen, thank you so much. I'm Caroline Hepker. Time now to look at some other stories making news in the UK and around the world. President Volodymyr Zelensky has backed a US proposal for Ukraine and Russia to stop strikes on energy infrastructure. The Ukrainian leader told US President Donald Trump it would be one of the first steps to fully ending the war. Israel has sent troops back into Gaza in what it's describing as limited ground operations. It's the country's first incursion since the 6-week ceasefire lapsed earlier this month. Officials are vowing further pressure unless Hamas releases its 59 remaining hostages. And the UK has dropped 3 places to 23 in the World Happiness Rankings. Finland topped the list for the 8th year in a row, with Afghanistan bottom and the US also falling to its lowest ever position. Those are some of our global news headlines.
Now, a study carried out by AJ Bell in 2022 found a significant investment gap between men and women in the UK of as much as £1.65 trillion. How much could addressing that help to boost the UK investment landscape in a bid to close the gap? Former Goldman Sachs executive Ayesha Ofori founded Propelle, the UK's first female-focused investment platform. For her work, Ayesha has been shortlisted for Veuve Clicquot's Bold Future Award, and she's with us in studio now for more. Ayesha, good morning to you.
Good morning.
What is the background to the issue here? Why are women in the UK investing less than men?
There are a few reasons. One of them, I'd say, or the main one, is that women lack confidence, or I'd say it's perceived confidence. Often when you ask them lots of questions and things like this, they do actually know more about investing than they think. However, they don't act on it because they think that they need to know more, or they need an expert to sort of guide them. So they inevitably tend to be savers rather than investors.
Okay, isn't this also part of the gender pay gap and the fact that women often work slightly fewer hours, fewer years on average over the course of their working lives?
That is part of it, but not all of the story. It's a number of things. So the pay gap obviously is one of them. Women are the ones who have children and tend to be the carers, so take time out. Women also tend to be the carers for relatives, parents, and then women also are affected quite a lot during menopause and take time out again. So when you add all of these things together, on top of the fact that women live longer and that they're saving rather than investing, it all sort of contributes to the problem.
So there's huge untapped potential here as well to boost both investment and individual wealth. How do you tackle it?
So for us, it was really about trying to understand the psychology of women when it comes to money and investing, but also what are those hurdles that have been holding women back, and how can we put those into a platform that's accessible to the masses and enable women to really feel comfortable and confident when they start investing. That's the only way to sort of shift the behaviour from saving more towards investing.
Are you concerned that perhaps an initiative like initiatives like yours might suffer some pushback as we see a rollback of diversity, equity and inclusion in the United States and that focus on women? Do you think that perhaps will affect what happens here in the UK?
I think absolutely. One of the ways that we reach women is working with corporates, and we've already started to see a shift. But it's really interesting. The individuals within those companies, particularly in the UK, are sort of like, we still love what you're doing, we still want to help. However, money and funding and sort of departments are being shut down. That said, they still recognise the need, and so they are still trying to see how we can continue to work together. But I've never been afraid of sort of having that pushback. Even when I first had the idea, a lot of people told me I was insane, and if women weren't investing, they didn't want to.
Well, investing in female-led businesses is a broader issue as well. One being highlighted this morning by Hannah Bernard, the co-chair of the Invest in Women task force in the UK as well, writing in the Financial Times. What is the issue, and is it getting worse? I mean, I wonder what your own experience was, even getting investment for your own company.
I use the word horrendous, and I don't use it lightly. I perhaps was a bit naive and thought that it wouldn't be so challenging for me. I know the statistics around women, but also it's even worse for black women. But I sort of said to myself, I have a master's degree in physics from Imperial. I worked at Morgan Stanley, Goldman Sachs. I've got an MBA from London Business School. Surely those things count for something. But it was still incredibly difficult. And inevitably, what I found is that a lot of the investors are men. They're the ones that tend to have money that they're looking to invest in these types of businesses. And I guess it's partly they didn't understand the story or the need as to why women need additional resources or an investment platform for women. But I also think it's just inherent biases as well. But the way that I got around it is, over 70% of my investors are women, because they just naturally understood what we were doing and were also prepared to invest in a business run by a woman.
Okay. How is Propelle doing as a platform? I'm very interested in this subject because on the one hand, you've got, like Hannah Bernard and Debbie Wasco, who are leading the government-backed by Rachel Reeves, sort of personally, the Invest in Women task force, focus on women. Okay, investing in female-led businesses is going down, but nonetheless, they're making that case. And on the other hand, a lot of kind of female-led clubs in London, for example, trying to build networking bridges. Those have shut down recently. So it's really a very difficult space. How are you going to manage this and navigate this when it comes to Propelle itself and building that business?
So I think a lot of resilience, I'd say, is the first thing. But when you speak to women, what I found is they actually do want to invest. We're also going through something called the Great Wealth Transfer. So women are amassing wealth at an accelerating rate. I think it's actually this year that the statistics say that 60% of UK wealth is going to be controlled by women. So women are getting more and more wealth. And when you do actually speak to them, they want to invest. So for me, it's more about finding them. How do we reach them? And we do that, as I said, through companies, through organizations. But actually, we've grown massively just by word of mouth, referrals and social media.
Are you worried, though, with, as you described it, how companies are reorientating their approach to efforts like this, that funnel for you gets cut off?
I think in a sense of potentially companies paying for some of the services we provide, yes. But we can still go into these companies and engage with their women's networks and things like this, and that has been incredibly fruitful for us. So, as I said... So
more informal connections necessarily than perhaps the formal ones funneled through company management.
Exactly. So maybe the company can't formally engage in the same way anymore, but the individuals in these companies absolutely do. So those doors are still open.